Welcome everyone to the Kendall Report. Well, folks, you're doing a great job. You're keeping those likes up over 1,000. I think we got 1.2 again, so keep up the good work. We'll keep the videos coming. Hey, it's free. Just hit that like button. Make sure you subscribe and tell your friends about this channel. I really appreciate it. So yesterday was somewhat like watching paint dry. It was pretty quiet, actually. We printed a R1, S1 value. We really were unable to get much traction of anything, but it was after an STX sell buy signal, which always suggests that we get a slight up to sideways for 2 sessions. So tonight's session and into tomorrow will be our second sideways pattern. We're seeing a little bit of weakness overnight right now. And what we've been seeing lately is that a lot of the action's happening overnight. It certainly wasn't happening yesterday. So during the day. So a couple of things that I want to just talk about before we get into things. You know, we looked at the S&P, just like I said, the STX buy signal across the board. S&P was down minus 0.13, basically flat. NASDAQ was exactly 0.0 flat, and Russell was up a slight tick. And I think we're going to see a continuation of this, because what's happening here is the markets are trying to set up a pattern that is going to be an interim low. When I go through the database, as I've been talking about over the last couple of days, we're coming into what I believe is going to be a bottoming in the database as well. I'll go through all the details here in a few minutes, but let's take a look at some of the news that came out yesterday. New home sales minus 12.6, so real estate just continues to get hammered. IHS reports the manufacturing and services both negative. No one really cares about those reports, but so there's nothing really there. As we come into Wednesday, we've got durable goods coming in at 0.8 and pending home sales minus 4.5. Those numbers are going to continue to be weak. I don't see any way out from that standpoint. One of the interesting things that happened after some of the economic values came out early this morning, the metrics came out, we saw a print down to basically 3%, 299 and change on a 10-year. It rebounded at the end to 305. But for whatever reason, no one cared about the higher yields today. This was a higher print than yesterday, but it didn't matter today. Remember, the narrative yesterday was because of high yields and all of these different elements. Well, that didn't matter today. And I think what's really happening here from a standpoint of fundamentals is everything's looking forward. So Wednesday is going to be another dud day. I think we could see some downward prints if we get through some of the numbers I'll show you on the technicals. And here in a few minutes, there are some key support numbers underneath here that I do expect to hold. We'll go into all of that detail shortly, but we're looking, I think everybody in the markets are looking forward to Thursday. We got GDP numbers coming out. I don't think those are big, but they are setting up for the big Friday event. So we're also looking at claims coming out. So it's mostly unemployment, economy information coming on Thursday. I think we'll start to see some of that action based on what those reports come out. Maybe folks will start to anticipate what Powell's going to say from Jackson Hole on Friday when that conference comes out. And of course, we have PCE numbers coming out. So we've got inflation numbers. And like I've said before, they know what these numbers are already. So they're preparing everything. And I think we're going to see not necessarily a dovish message, but we're not going to see a bearish message either. They don't want to rock the markets. They're pretty happy with what's going on. And even though the 10 years printed up and there's a lot of hoopla around that, I don't think that's as much of a deal as folks are painting it out to be at the moment. Like I said, no one gave anything about what was going on today in the 10-year. So I think in general, there's not a lot to talk about. It'll be a lot shorter video than last night. Just because I went through some of the Elliott analysis, but we're really just setting up for the next couple of days. So today's going to be a pivot day. We could, I'll go through the details here, but I think we could see another day of the sideways, maybe a little bias. We got bias to the downside so far overnight, but I think it's even, you'll see here in a minute, we're pretty close to printing the bottom for overnight. So we'll see how this goes. Let's go ahead and take a quick look at the database. Okay, so we're continuing to see some liquidation here, and the liquidation is 1,042 sell signals, 93 buy signals, and we're at 67.22%. Yesterday we were 69.02. I was talking to you about this, the downward numbers around 68 to 62%, and I think that's going to be really where this market's going to bottom. And I don't think we get under 62. So we're starting to see, we had a big tranche of selling yesterday. Now we've got a smaller tranche. I suspect if we stay somewhat range bound again, and you'll see here in the technicals in a minute, the market grid is suggesting we are going to be range bound for another day. And what likely is going to happen here with the database, maybe a little bit more selling, but it's going to hit that probably around that 62 metric. The extreme that I would allow for is around 58, but I think will stay above 62. When that happens, we start to see some stability the next couple of days as we come into Thursday and the reports I was just talking about, that I think we'll see some interesting configuration starts to set up from there. And as we come into Friday, because I don't think there's any way they're going to come up with some big bearish message. And I don't know, maybe you guys can comment in the down below, but I don't think there's ever been a Jackson Hole meeting that was a disaster afterwards. Maybe there has been. I don't recall one. They always seem to be kumbaya when they're having their party and having their wine and enjoying themselves after the big meetings of talking, as the central planners get ready to control everything that we're doing through interest rates and their allocations of capital that they feel us little folks need. So let's go ahead and get into the technicals tonight. This should be pretty quick. Okay, so first market, as always, we'll cover the S&P. Last night, if you didn't see last night's video, you might want to go back and watch the analysis of what I believe is going on from an Elliott viewpoint. I do think we're in a sideways correction here. We're seeing PPM1 with this little more weakness. We're at a minus 0.21. We're almost trend mode down, which is suggesting that what we're likely to see here is around the 42.28 is going to be a near-term cap on this market. Now we're seeing this decline right now at about 9 handles per day. So there's still some upside, even though this PPM1 is starting to come down. PPM2 is at a 0.22. It's actually upticking here. And the market's going to want to get back above that 41.70 level. We printed yesterday, was interesting. We printed up to 61. As I mentioned earlier, we got S1 was 25 on the downside. We printed 18. That happened while we were talking last night. And R1 is 56. We printed just above that at 41.61. So going back to tonight's action, we look at S1 14, almost a direct hit, 41.15.75. So S1, R1 maybe again today. And I'm still kind of leaning to the potential to get back up toward the R2 number, which would be 64, be a retest of yesterday's high. I think just an absolute sideways range here. So let's talk about the dangers on the downside, what the trigger points would be to watch for. If we got through 40.97, this is a key level. And then all the way down to STX today is 40.63. And I'm just going to flip over to the weekly chart for a minute. I mentioned this number last night, but the 10 period moving average, 40.38, that has a PPM value of 1.11. There is virtually zero probability. We're going to say 10%. So 1 out of 10 times we're going to decline under that number. As I said last night, if you see this number, that's a screaming buy, and I would be all over that value, because we will bounce out of there, whether we go to new highs or not. We're going to come back in, and we will see 42 handle and see that setup that I talked about in detail last night on the Elliott. So go back and watch that. I laid that out, I think, pretty good. It was a good segment. In fact, I'm going to see if we can't rip that out and do a video just on that Elliott analysis that we did last night. So over to the NASDAQ. NASDAQ is already printing down. Here we are at 12,823. We were below S3 already, so we're seeing a lot of weakness in these large cap tech stocks. Basically are coming under pressure. Maybe that's because of the interest rates. But we already pressed down. But I want you to look. This is a weekly chart that we're looking at here, by the way. And that S3 weekly is setting right there. We also have 12,622 is the 10-week moving average. So once again, we're at that point where we're at an extreme on the NASDAQ. So watch for a bounce out of here. 12.6, we'll call it 12.625 is going to be the downside. That also sets up fairly good to STX on the weekly. So let's go over to the daily. Daily, we have the 40 in there, 12,622. They're almost the same number. The 10-week and the 40-day moving averages are similar value. We have pretty strong downside, minus 0.41. And what that tells us is that the 13,300 level is major resistance. That's 500 points up. That's a long ways from here. But once again, on the values here, S1 is 29. We've almost printed S1. So S1, R1 again, probably sideways, maybe with the upside printing back up to an R2 level at 13,038. So we'll go to RTY next, and same scenario, same story on all of these indexes. Actually, we are seeing some pretty decent downside on PPM1. My expectation is if we look at some of the numbers that are going to start to come in, we should see the PPM stabilize here and start to turn up. But just like with the other indices, we're seeing slight upward bias. We're still at a 0.27 on PPM2. That value is 1937. We're trading just below that. I think the market's going to try to get over that level. R1's 30, R2's 1941. So same story, same place. Looking at S1, R2, but most likely we could see a very quiet range again, S1, R1. And if we do print on all of these indexes, if we do print through S1, then go to the S2 numbers. That's going to be your next level. I do believe that over the next 2 sessions, we're going to see the lows. I thought we saw the lows of the week. I've been getting the trolls a little bit mad at me because, not really trolls, legitimate comments that I thought we had an intraday low the other day when I tweeted some things out. But this pattern is setting up a low. I'm going to stick with that. Like I said, go watch that section on the Elliott wave analysis I did last night. I think that will help you to understand where I'm coming from on this pattern. And the main thing that's driving everything right now, and then this is something that happens often, is the primary driver of the trends right now are the weekly charts, not the daily. That's why I'm not concerned about these negative PPM1s getting close to trend level, because you have that huge, we're very close, as I just showed you, on the NASDAQ. We're not far off on the S&P from hitting that 10-week moving average. And with the value of in these whole numbers 1.11 and greater, that just tells you the probabilities are very low. At least you get a bounce off of there, and the patterns that set up off of that we'll be able to read once they go. And that, as you know, I do daily commentary, so we're trying to walk the markets forward to day to day, but there is some substantial numbers. That's why I did the Elliott analysis last night. All right, so 10-year will be next, and this is the daily. We're trading yesterday. 3.067 was R2, so we got just above there. 3.08 is R3. This is yesterday. If we look at the values for today, we're looking at R1 3.07, so we could see a slight uptick. S1 3.036, and on S2 back to 3.01. So we're looking at probably a continue to be range bound. There's still a slight bias. We've got very strong PPMs across the board right now. keeping rates somewhat hot to the upside. But like I said in the opening comments, we're not really seeing any reaction to that at the moment. And I think that will be the case as we come into tomorrow. And one of the things, like I said, we got home sales coming in right now. There's everything that's being priced into the 10-year right now really is looking at Friday and what their expectations are from the standpoint of what Powell might say. I really don't see there's anything substantial there. Just quickly want to look at the weekly charts just to set up that pattern. I'm not even going to zoom in on this, but just we're above the key levels here with the 21,392. I would say this again, 292 is the downside. As far as the upside go, I think we're basically getting into that upper band of the upside. I don't see us getting, going and retesting the highs, not at the moment. Maybe there's something in here that's going to happen, but I'm looking at the PPM1 at a minus 0.63 here, and PPM2 is looking as turning up and still positive. So that it's an interesting configuration because the 10 and 21 period moving averages are the same value, 2.92. One's 2.927, the one that's rising. So we're getting a crossover, and typically when it crosses over like that, that ends up being a top of the market, and we'll come back into the pattern. Like I said, around 2.92 is going to be where these values are going to be the downside. So I don't see anything really big downside, but I think we're also getting close to stalling. Now this is weekly, so as we come into next week, we're going to see those numbers cross, which should signal some sort of short-term high in the yields. Next market, we'll stick with the weekly chart here on crude oil. Crude oil is starting to come up. I talked a lot of details, so I'll just update you a little bit. As far as the action goes, we're at 93.45. We saw a decent rebound. I'll go through the dailies here in a second, but we're right back into almost to that 10-period moving average, 96.13. I talked about this in detail. 86, probably 90. 96 is the top end of the range. We're just going to be range bound. But the main thing that feature to watch is this 40-period moving average, which is right now 88.46. So we're going to call it 90, 88 extreme on the downside, and we're printing up about where this thing is likely to top out or stay in a range. I don't see us getting too crazy here, although, having said that, we're starting to see the PPMs. But PPM1 is still negative. It's trying to turn up. This is a weekly chart, so we're not going to see anything happen here to next week. But we're getting close to the potential for another surge in crude oil. And whether that ends up flowing over into XLE stocks or the oil stocks come back in and maybe they give some leadership, we'll see how it goes. I think as I've set up pretty well on the equities is that we're going to be locked in a range. If you look at I keep going back to last night's video and talking about what the expected range is. We could be locked in to a zigzag pattern, double three type pattern on the equities, which means we just trade in a range here for longer than you would like it to happen. Let's go over to the daily chart. Daily, interesting. You can see a green arrow here. It says purchase. So we actually got a buy signal from our model. They've been really choppy through this pattern. We've had a buy and then we exited. We got a short buy. So it's just been a chop pattern here. And we just haven't been able to get any traction. But the PPMs here, 0.22, 0.06, 0.34. So it's still very mixed. And like I said, I think the ranges I painted out in the weekly analysis just a second ago is really where you want to stay. All right, the gold is continuing just to stay in a sideways range. We're trading down just a little bit overnight and just sideways. Nothing really to look at here. We still have these downward projections, which are valid, but I don't think they're going to hit 1620 is a pretty big number on the downside. Let me flip it over to the weekly because that's really the chart we need to pay attention to here. And weekly, we're down to that 200-week moving average. That value is 1744. We're trading 58. Low so far this week is 1740. So we basically printed down into that again. And the resistance overhead 1780, which is the 10-week moving average, still has a negative value, even though we're starting to see ppm 1 turn up. If we get through the second derivative, then it's possible we can trade over 1780, and all of a sudden we're right back into 1795, 1810 level, but nothing really significant. I mean, this market just stuck where it's at here. Okay, next market and the final market tonight is Bitcoin. This is weekly, continue to be this sideways here as I was talking about last night. There's really locked in this range. Downside 2805, we printed so far 2900, so we're holding that S1 value. R1 is 22030. I think we're locked there. I don't see anything happening. The one thing I talked about last night is this ppm 1 is just screaming to the upside. That's starting to set up a potential bottom, but we've been so flat for so many weeks now, it's getting hard to even make an analysis of what's going on here. I do like the configuration on the weekly charts. We'll bring up the daily for a second just to finish this off. But daily is still negative. You still have downward pressure, 22.8, 23.13, tons and tons of resistance. The only thing, that 2800 is the number to watch on the downside. Okay, folks, we're able to get through the video pretty quick tonight. I think this was really just an update video. There's nothing significant that I see that is changing here. So remember, we got to have 1,000 likes. We're coming into some pretty critical levels here, so make sure that you get the 1,000 likes so we can keep going. I like that we're getting this. I'd like to see the channel grow, so make sure you share information if you like the channel and like this content. But remember, subscribe, like, and share, and I will see you tomorrow night, hopefully at the same time. Thanks a lot, everyone. Hit that like button, folks, before you leave. That's funny chatter on Kathy Wood. What a joke. By the way, the buy signal we had on ARK-K, we sold out a number of weeks ago. Those of you who have Wavetech on the daily 1.2, you can see that. Anyway, folks, hey, listen, I'll just give you a quick warning. I may go live tomorrow and do a real-time trading session with the indicators. I'll let you know on Twitter. So make sure you follow me on Twitter, and that's on the page there. Twitter @expert. So PortfolioXpert, there's no E in the expert. Have a great evening. Good day trading tomorrow.